I have been self-employed since 2018, freelancer. Up until this year, I was a single member LLC. I was paying way more in taxes than I needed to, okay? And as a small business, that is a big deal. So I switched to an S-Corp, which has the benefits of being able to take money out of the business. I can take money out of business without it being taxed. Big deal, okay? So in order to be an S-Corp, though, you have to put yourself on payroll. So now the business exists. I exist as an individual. I'm put on payroll by the business, and the business and I split self-employment tax on 30% of net income, which is considered a reasonable salary, which has to happen if you want to be an S-Corp. So I'm going to get a third of the business's net income. We're splitting 15.3% on that.
This is the number one mistake that we see with business owners when they come to us and we help them strategize. Here is how to fix it and what this actually means for you. If you have a business and you are netting over $50,000, meaning after income and all expenses, you're still netting $50,000, you should look into becoming an S Corp. You can do this by yourself if you wanted to by filing a Form 2553. I don't recommend. Your tax strategist should be helping you. This will save you, if you're netting $100,000, a minimum of $12,000 in self-employment taxes. Here's a number two mistake that clients make when they have a business. They do not have an LLC from day one. In order to become an S Corp, you have to have an LLC. So make sure that when you start your business and you're actually taking it seriously, you talk to an attorney and you establish an LLC. If you don't, that could delay the S Corp benefits. Mistake number three is that when you do become an S Corp, you don't run payroll for yourself. That is one of the requirements in order to be an S Corp. You have to be on payroll at a reasonable compensation. Your CPA should help you with that. Another mistake that business owners do when they have an S Corp, they try to do their own bookkeeping. Here's the thing, plain and simple. If you're going to play in the big leagues like wealthy people do, you need to outsource your payroll, your bookkeeping, and your payroll as well, because you're going to need balance sheet, you're going to need financial statements, you're going to need draws. And let's be honest, you probably don't know how to do that. So outsource it. Here's some tips once you become an S Corp on the money that you can save. Number one, make sure that if you have kids, you pay the kids. I have a whole video walking you through how to pay your kids up to $15,000 a year and pay zero taxes on it. Number two, if you have a spouse, put your spouse on payroll, but put them specifically just to contribute to a 401k. And number three, make sure that you're using the funds from this S Corp to funnel into real estate. That is how you're able to really get really big deductions. It could be real estate, it could be another business. But if you're just printing money in your S Corp every single year, you're not going to have a lot of tax deductions.